Hey guys, this is Robert Cole with the Cole Group at Nexa Mortgage. I'm a little late to the party, but I wanted to put this presentation together for you regarding HUD reducing the mortgage insurance premium on FHA loans, which to me is in this market with affordability being of an issue. I think it was a great thing for them to do, as I don't see interest rates being reduced anytime soon. So doing something like this actually helps the market, or at least give it something else to consider as a buyer in using and purchasing your home. Here's the actual announcement. The link is below for you to read, but the whole purpose of this presentation is for me to give you some highlights that I think that might be advantageous going FHA instead of going conventional. For one, affordability is an issue. And as I mentioned earlier, I don't see rates going down anytime soon, just based on the way the market is moving and how inflation is really not letting their grip grow on the economy. So having something like this may help buyers reconsider moving forward with the purchase they had or the thought of purchasing, with the understanding that at some point we may be able to refinance as rates get better. So what I did is I put three scenarios together for you to review. One is I want to compare the old MI against the new MI so you can see how the numbers actually pencil out. A lot of the time we see announcements regarding the benefits of a particular loan program or something that the government's doing to help buy the consumer. We don't really see how that would affect directly myself, or a client of yours. So what I did is I put three presentations. One is based on how does the old MI look compared to the new MI? Put in an FHA loan against a conventional loan, and then also how can we increase the buying power of our clients. So the other thing that I wanted to point out, which a lot of buyers and agents are not aware of or may not be aware of, is the loan limits for FHA for 2023. We have a limit of $1,089,000 with 3.5% down. I don't know any other program that would allow you to put that low of an amount with the type of rate you're going to get on almost a $1.1 million property, or going all the way up to almost $2.1 million property with 3% down as your purchase. Now, the additional whole pushbacks from listing agents or buyer's agents is always like, well, what conditions or what things do I need to do to the property for the property to be sold or not have an issue with appraisal? So I put a bunch of guides in this presentation, from the sales concessions to FHA property checklist to required repairs. And a lot of when it comes to agents, a lot of times we think about what repairs are needed. The same repairs that you would normally need for when a buyer is buying a property on an FHA with a conventional loan are very similar to what you would need for an FHA buyer. And if I was representing the buyer, I know certain things that I would ask regardless of what kind of loan they're actually doing. So let's go through the first presentation. So the first presentation, once again, or total cost analysis, is what the new MI and old MI has done for the borrower. So just based on that perspective, we're looking at a $700,000 purchase. The rates being the same, all qualifications being the same. We're looking at a savings of $170 a month with the new mortgage insurance premium. And this is how the numbers pan out. This is the old mortgage insurance monthly payment, and this is the new mortgage insurance monthly payment of $170 in today's market. Now let's compare an FHA loan against a conventional loan, which the difference is we're just coming in with 5% with an FHA, because conventional, we got to go apples for apples. So the least amount of down payment on a conventional loan that's beneficial would be to do 5% down. So the reason why we're saving so much, one, is because of the rate of an FHA compared to a conventional, and then two, the MI mortgage insurance being lower, not lower than the conventional, but much lower than what it used to be, that the numbers pencil out a lot better going FHA than it does going conventional. And over a 10-year period, we're looking at about a $10,000 savings in mortgage insurance and interest paid for that particular borrower. Now, the last scenario is how can we increase or improve the buying power of our borrowers? So what I did is, one of the trends, and we're all dealing with it today, is we're doing a bunch of 2-1 buy downs, buying the rate down. So in this situation, if you were to combine an FHA borrower with a 2-1 buy down with today's mortgage insurance premium and FHA rate, we could actually save them $790 for the first year. With that same scenario, all we did was apply a temporary buy down to the previous scenario for us to get this type of savings. And of course, the other thing you got to be aware of, let's say this borrower was comfortable paying the initial payment that had at $700,000 with the old MI. If we're doing a 2-1 buy down with the new MI, we could actually increase that particular borrower's buying power by $38,000 compared to buying $700,000, which that's what they previously were approved for. And that's how you're going to increase their buying power, or at least keep the buying power they initially had. So in general, this is my highlights behind that. If you want to get more details on how the numbers are broken down, or you have a particular scenario you would like me to look at, or maybe explain, or maybe decipher for you to get you into a home, or if you're an agent and you have a buyer that may need assistance in doing that, or have a better idea on how to go about doing that, please don't hesitate to give me a call. I'll be more than happy to put something like that together for you. But in general, I hope you're successful in this market, and I look forward to talking to you soon. Okay, bye-bye.